Why, hello there, everyone. Happy Wednesday to you. It is September 8th, 2021. It's time for a stock market update. We're going to talk a little bit about what happened on Tuesday. That would be yesterday, the 7th. This, what you're looking at right here, is the change in these stocks that occurred on Tuesday. And talk a little bit about what we're going to do on Wednesday, and also I want to address some things. So, I have a friend that called me a liar in the last stock market video I did because I didn't turn $500 into a Tesla. That was the promise that I made back earlier in the year, and that is true. That failed. I did invest $500 in Tesla options back in, I believe it was March or April. And those options, while they doubled in the first day, 500 turned into 1,000, I think, and then I lost it all that week. So, or that month, or however long they were. So that didn't work. However, we don't quit here. Ken Braverman does not quit. We continue to invest, and also something I was asked to do at that time was to look at other stocks besides Tesla. So we did both of those things, and now we are looking at all kinds of different stocks. And what I'm going to start doing in this video today is talk about one thing and one option that I will actually tell you I think it's a good idea to buy, and I'm going to try to buy it myself today when the market opens. And we'll see if we can just follow one at a time so that I can give really specific advice to people and show you how options work. So let's just start with that today. And we're going to go through a little exercise. So before we talk about yesterday, we're going to talk about Brooks Automation. My option of the day is Brooks Automation, which is a company that I haven't mentioned before. I only reviewed them for the first time today. I have a master file where I go over all kinds of different stocks and keep notes on them historically. And I found Brooks Automation today because they had a very interesting day today. They were up 5.5%. And I had a note, my note over here, before I changed it today, my note had said, like looks really interesting, like got a lot of potential or something. And I had reviewed them back in April or May of 2020, a long time ago. So I didn't really know much about them, but I looked them up, and they are kind of a semiconductor manufacturer, supplier, process assister, like contractor, and all kinds of stuff related to semiconductor chips, wafers, things like that, manufacturing. And there is a huge chip shortage. Maybe you've heard. There's a reason why a lot of cars can't get finished and why things can't get made is there's a huge chip shortage. Well, when there's a huge shortage in a highly technically specific industry like chip manufacturing, the people that are in that industry are getting their phones ringing off the hook. And if you look at what happened with the revenue and the profit of Brooks Automation over the last quarter and the last 2 quarters, really, it has gone up pretty significantly for them proportionally, and their financials are looking good, and they have cash, and I'm not worried about this company. They seem to be doing the right thing, and now they've got that whole unlimited demand problem where everyone's trying to get chips made, and that's a great scenario. And their stock actually kind of took a beating over the last this is 150 days. Look at this. They actually went down. They had not gone well, yet their revenue's going up and their numbers are going up. So I think that there must have been some type of inconsistency in what expectations were. You can see that, look, expectations rose, and then down, except now the numbers are picking up when it comes to their profits. So I think this is a perfect storm of a company that's undervalued by accident in an industry that is that has a shortage right now, that has huge demand. So this is a great thing. So what am I saying to do after all of that? Well, they're at $90.41 a share right now. They were up over 100, like 110, I think at one point is probably what that is here. This is about 100-ish, like right over here-ish, I think. So they were up 5.5%. They were up four or five, almost $5 a share. Well, what's going to happen to them is they're going to continue to get demand. They're going to continue to be profitable, and they're going to show good numbers next quarter. So what you want to do is you want to get an option on them. I believe the option for October 15th, which is a little more than a month away, at a strike price of $100. is $125 is the cost of that option. Now, what I just said was, what an option is a contract, or it allows you to buy 100 shares of a stock at a given strike price that you name. So what I just said about a strike price of $100 for this Brooks Automation option, it would be, we think that Brooks Automation before October 15th is going to get above $100 a share. We think they're going to get to at least $101.25. That is what would break us even if we purchased the option to purchase 100 shares, which is what options are. A long call option is the ability to purchase a stock at a given share price. So we'd be allowed to buy a share of Brooks Automation, or 100 shares of Brooks Automation, for one option contract is 100 shares. We'd be able to buy that for $125. And that means that if they got to $101.25, we could buy those 100 options and turn around and sell them on the market, buy them for 100 and sell them for $101.25 each, and we would get $125. It would be our net profit, and that's exactly the amount that we paid for that contract, less any contract fees. There's like a 60-70 cent contract fee every time you purchase an option contract. So you actually need to go a little bit more than that to make any money. They'd have to get to $101 and like 20 or 30 cents or something like that. Point is what's interesting about options is that their value fluctuates greatly all the time, especially when a company gets hot and starts going up percentages a day. It has a move like this, like a 5.5% move. If they have another 5.5% move tomorrow and they go up to $95 a share, $96 a share, then the option of the $100 strike price option, which I'm saying to buy at $125, to put in an order to try to buy one of those at $125, October 15th expiration date, $100 long call option strike price for Brooks Automation. That's what I'm going to buy tomorrow and show you what that looks like. That option would be, if they go up another $5 tomorrow, that option will be probably like $350 at that point. You'll like double or triple your money at least, because the chance of them getting over 100 all of a sudden is greater. And if you look at kind of what some of the other rating agencies have had for certain target prices for Brooks Automation, they're up in like the 140s. I kind of understand it. I mean, I actually don't understand why they had this drop over the last 90 days. That's kind of crazy. Just weird expectations, and maybe their market cap isn't big enough. They're not competing with a company like Google or huge companies that have amazing market caps. So maybe that's why they just some money filtered away for them just to go to other places. But this is a really, really good pick in my opinion. So that's the pick of the day. $100 strike price, a long call option on Brooks Automation, October 15th expiration date. It costs about $125 right now. I'll try to buy one tomorrow, and then we will show you what that looks like and when to sell it if we're able to buy one tomorrow. So that's my for those who ask me for specific advice, and you don't have to take my advice. Obviously, you can do what you want, but when I provide analysis of what's happening, I tend to see the direction in which things are going on a macro level, and it's very easy for me to do analysis of companies really quickly, and I'm right almost all the time. So you should listen to me. There are people who don't listen to me, and there are people who do the exact opposite of what I say because they've seen me make a mistake once or something, and they're averse to listening to good advice sometimes. Those people lose money. And the people that listen to me and do what I say make money. Because if you look at my track record, I just crush it. So let's talk about the 10 stocks that are on the top of the list right now. Well, Moderna. Of course, I have an amazingly high strike price. A quarterly target price on Moderna of $750 a share. That's right. That's like that's like saying they need to go up by like 80% from where they are right now to get to my strike price. Why is that so high? I've discussed Moderna a lot in previous videos. Basically, they're changing healthcare as we know it, and they have a product that's trying to help society sort of get back to normal. Plus all the other diseases they're going to cure. Everyone's realizing it. That's why my strike price is so high. That's why they're a great bet, and why this ceiling price and everything that I say about Moderna, I continue to say about Moderna, and I will continue to do so. So I had some options in Moderna today that I think they almost tripled in value today. Good run. You can expect them to have volatility because they're moving so much all the time. Like, look what they do in a 30-day period. They're just, well, that actually doesn't look that bad. Usually they're moving around and they're doing good things. We talked about Brooks Automation, and I think they'll get to over 100 in the next month. Tesla has a good day. Tesla has a good day today, up 2.6%. I have their strike price at 800. They're still not there, so they're number 3 on the list. They're always a good bet. I could talk about Tesla forever. I'm going to make movement on purchasing a Tesla vehicle, obviously before the end of the year. That's the promise. So we'll figure out what that vehicle is going to be. It's not going to be a Cybertruck because the Cybertruck will not be ready. So we'll have to be something else, and we'll talk about that in a future video. Abbott Labs. So Abbott Labs is an interesting one because I like their financials, and they have the rapid test, and the rapid testing is going to be a very interesting phenomenon. I see it happening all over the place because there's a desire for people to kind of walk in and swab something that's not invasive and do a quick like saliva just to get an idea if somebody requires further look or whether somebody's shedding or yada yada. Like, just knowing, even if it's not, there's like sensitivity and specificity when there comes to test, and the way that they judge these things means it's not necessarily the most reliable, but it doesn't have to be. Like, we're going to have a lot of false positives, but that's okay. Like, at least we're going to get a little more knowledge, and we'll know that there will be false positives. Point is, I think there's a lot of demand for this. And so they're a slower moving company by dollar-wise, so you can get the options fairly inexpensively, around like the 135 range. I think I have the target for them at about 135. Yeah. They'll creep up, but good things happening with them as more of their product. I think the more their disposable needs for like chunks and chunks of quick rapid tests are going to be needed, and I think that Abbott Labs has them. Microsoft briefly dropped below 300 today. I would totally snag it. I put their target up to 315 because they did that little up and back, so I think they'll go to 315 now. Similar move with Sherwin-Williams today as well. They're down, almost to 300. They're not going to go much below 300 at all. If you see them go below 300, grab an option on them at 315 because they are solid. So these two got a little cheap today, so it's something to keep an eye on Wednesday. Google Alphabet creeping along to 3,000. Options are sort of expensive on them, but they will creep their way to 3,000. They're a very good bet. Netflix. So Netflix is one that I finally reviewed, and I have to say a few things about Netflix. So I don't watch a lot of television. I don't watch a lot of film anymore. I can't. I'll watch YouTube. I'll watch shorts. I watch interesting documentaries or quick 10-minute topics on YouTube. I'm more of a shorter attention span. Everybody I know, though, whenever I'm hanging out with people, they all got the Netflix. I have a Netflix account. I was goaded into getting one, and now I can't cancel it because, of course, everybody uses mine. Now, the thing is I thought that Netflix is kind of a fad, and I'm like, how are they going to do that? How are they going to make a ton of money? How are they going to become the at-home movie theater? And well, they're a perfect storm in a couple ways right now. One is they have won this battle where like everyone's got Netflix. Like, not everybody has Disney Plus, not everybody has Hulu. A lot of people have Hulu, but not everybody has Peacock. No, but somebody's got a Netflix account, right? And it's not that expensive, and they're getting you hooked with their programs, and people are understanding programs, and they're sharing it through the Netflix. On top of the movie theaters essentially being virtually empty, because who wants to go sit in a movie theater and get coughed on by a bunch of people you don't know that got all types of variants of COVID, right? Nobody does. So, people that think that, go invest, people who say that that they think that going investing in like the movie theaters because they're really, really low right now is a good idea. I think you guys are idiots. I don't think that stuff's ever coming back. Because there isn't a need for it. People want an at-home theater instead. Or people want to project movies on the sides of walls with projectors or go to drive-ins when it's nice outside. Like, you could see all the different things that changed when the movie theaters essentially dried up or were closed. Netflix is benefiting from that, and the most importantly is this. I looked at their financials. Not only do they have staying power and I subscribe, but their financials are phenomenal. So they were paying a lot for content, but somehow they are profiting. And it's because they got so many subscribers. That's why. So it's tough for me to cancel. I couldn't cancel. I couldn't cancel because I was like, oh man, I got to cancel. Like, friends, damn it. So I couldn't do it. And that means this company's got staying power. So I put their target price. They're on my list now. They're on that top 10. I got a target at 620. They'll blow. Actually, it's more like this. There's nothing that is going to stop them in the short term because there can't be. What? We have no power? We have no internet? Is that how we don't get Netflix? Is the internet goes down? Well, if the internet goes down, there's a big freaking problem. So I think Netflix is here to stay. And look at that. They pop up to number 3. I don't like that. Let's put it right here. Let's give them 630. Not quite 650 yet because they've just been on a huge run because everyone's realized it. So anyway, Intuitive Surgical is about to split, I think. So that probably creeps them up to 1100. Dollar Tree is a slower mover, but they still have some road to gain back because they went down essentially for what it looks like almost no reason, in my opinion. Lowered sales forecast, not really. They're still beating estimates, and nothing's changing. So, all right, that's the stock update for the day. I'll probably do another one tomorrow, I think, and or today or whatever Wednesday night, going into Thursday. I will put in a limit order to purchase a Brooks Automation, $100 strike price. $125 just to show you guys how this works. Give you specific advice. And we'll see if it goes through. And we will follow that and show you exactly how long call options turn into money when things go well. All right. Good luck, everyone. May all your trades be winning.